They say a picture is worth 1,000 words, but in Vancouver, that picture could be worth millions. And for a growing number of homeowners, that picture of success is starting to turn into a nightmare. Foreclosures are surging across Metro Vancouver. Court-ordered sales have more than doubled in the last year, but the story behind those numbers goes a lot deeper than missed payments. Because what we're seeing right now is a result of a perfect storm that's been building for years. And today, I'm going to break down exactly what's driving it, the process, the numbers, the hidden risks, and what all this means for Vancouver real estate going into 2025 and beyond. The truth is, this market is changing fast. We're seeing more distressed sales, more court-ordered listings, and more homeowners quietly struggling behind the scenes. And it's not because people suddenly became bad with money. It's because the math has stopped working. Higher interest rates, job losses, rising living costs, and fewer buyers, all of it has created the kind of financial pressure that eventually shows up in the court system. So let's break down exactly how this process works, what these deals really look like, and why some of them are far riskier than most buyers realize. Here's how a foreclosure actually unfolds here in British Columbia. It starts when a homeowner defaults on their mortgage. Maybe they've missed several payments, fallen behind on taxes, or breached a fundamental term in their loan. The bank will then send out a demand letter giving them a short window to get caught up, and if that does not happen, the lender then files a petition with the BC Supreme Court, and that's when the legal process begins. The homeowner then enters what's called the redemption period, usually about 6 months, and this is their last opportunity to pay off the debt in full or sell the property themselves. Now, in British Columbia's system, it is unique. We use a judicial foreclosure, which means the court oversees every step from the lender's petition all the way to the sale. And it's designed to make sure the property is sold for a fair market value, not just dumped for whatever the bank is owed. If the owner can't redeem, the court grants the lender what's called an order for conduct of sale. And at that point, the property can be listed on the MLS, shown to buyers, and marketed like a regular listing. But here's where it changes. Even after an offer is accepted, it's still subject to court approval. That accepted price becomes public, and on the court date, anyone can show up with a subject-free offer and a 5% deposit. The judge then reviews all offers, and the highest bid wins. No second chances, no counteroffers. You either win it or you don't. And I know a lot of buyers out there think that these court-ordered sales are just bargains waiting to happen. You're going to get these properties for well under market value, and that's not the case. There has to be a trigger offer. You may have heard that term, and that's what's needed just to get the property to the court for it to be signed, sealed, and delivered. So even if you come in and you put an offer through, if it's not accepted and it's not deemed reasonable, it won't even trigger the court system to have it go down the process of the sale. So just keep that in mind. I know a lot of buyers are out there right now are looking for deals, but these court-ordered sales are not always what they seem to be. So how bad are these foreclosures getting? So if we look back into 2023, there are just 20 court-ordered sales across Greater Vancouver. Today, as of the time of recording, there are 151 active listings, and that's a 175% increase in just year over year, and that is just Greater Vancouver. And this is the highest level we've seen since 2019. Now, that's still less than 1% of all active listings, but it is a warning sign. It's not just happening in isolation. That's the big thing here. We're seeing this surge alongside a weakening economy as a whole. Canada's unemployment rate is now 7.1%, the highest it's been in nearly a decade outside of COVID. And here in BC, we've lost over 37,000 full-time jobs since June of 2025. Construction, the backbone of our housing market here in BC, is facing an estimated 20,000 job losses as developers cancel and delay projects across the Lower Mainland. And if that wasn't enough pressure, we're also heading straight into mortgage renewal shocks unlike anything we have seen before. Roughly 60% of all mortgages in Canada are renewing between now and 2026, and most of these homeowners are locked in ultra low rates during the pandemic, between that 1% to 2% mortgages that felt very comfortable at the time. But now they are facing renewals that are going to be much higher depending on your credit, depending on your circumstance. They can be in that 4% range, although I will have a caveat, money is starting to get cheaper. I know for myself, I just renewed 2 of my rental properties. I got a 3.89% variable rate through Scotia, and I had a buyer client that's under contract right now, and they were offered rates from Van City at 3.57%, both in the fixed and the variable stance. So money is getting cheaper at the time of recording. It's likely we're going to have another rate reduction on Wednesday from the Bank of Canada. But even still, there is a lot of homeowners that are going to be doubling up on their interest payments. And with a lot of how home buyers work, a lot of them, even when the interest rates were at that 1% to 2% low bar, they were still lending out at their very much maximum. So even a doubling up or less than a doubling up of interest. And because buyers always love to lend to their limit, even getting a mortgage at these 1% to 2% ranges, any uptick in their mortgage payments is causing a lot of the problems that we're talking about when it comes to foreclosures and not being able to make their payments. So for a $1 million mortgage, that's an extra $1,000 to $1,500 a month instantly, depending on some of these rates that are going out in the marketplace. And it's hitting households already dealing with rising taxes, higher grocery costs, and shrinking job security, a problem that they cannot ignore any longer. And that's the pressure cooker here. That's driving foreclosures right now. And it's not about people necessarily overspending. It's about a system that was built on cheap debt suddenly running into reality. And while BC's delinquency rate is still low, around 0.19%, it's climbing steadily. And we're seeing with these court-ordered listings, it's the first wave of that correction. Now let's talk about what everyone really wants to know. Are foreclosures actually a really good deal? And the answer is sometimes, but not nearly as often as people think. On average, most foreclosures sell about 1% below list price, but there are exceptions. One detached home in West Vancouver was just listed under $2 million and sold in court for $1.75 million. That's roughly 12% below list and almost $500,000 below BC assessment. Another example, a condo in Richmond, originally listed for $840,000. After a few price drops, it sold in court for $681,000, or 19% below the original asking price and $100,000 under its assessed value. Those are the kinds of numbers that make headlines, but for every steal, there's someone walking into a nightmare. When we talk about the risk, this is the part that most people don't talk about regarding foreclosures in BC, because foreclosures in BC are sold as is, whereas you may see that in the realtor remarks or in the comments. And that means no warranties, no guarantees, and no conditions. If the previous owner is still living in the home during the court proceedings, they can take the appliances, strip fixtures, even damage the property, and you have absolutely no recourse. There are buyers that take possession of homes with holes in the drywall, missing fridges and stoves, and garbage left behind everywhere. In a regular sale, the seller is legally required to hand over the home in the same condition you saw it, but not in this type of scenario. With a foreclosure, you're buying whatever's left when the keys change hands. You could walk into a great deal or a renovation nightmare that eats every dollar that you thought you would have saved. And if you're planning to go forward with a foreclosure, you need to understand the process inside and out before you even think about showing up in court. So what does all this actually mean for the Vancouver market? Even though foreclosures are a small portion of listings, they're a clear sign that stress is building under the surface. Rates are high, confidence is low, and the easy money era is officially over. Housing starts are falling fast, meaning fewer new homes are coming online, just as population growth remains strong. That imbalance is setting the stage for a tough 12 to 24 months ahead. We are in a correction, no doubt, not a collapse, but a recalibration. And how deep it goes depends entirely on how long rates stay where they are. At the end of the day, Vancouver's foreclosure market is both a warning and an opportunity. If you're a homeowner struggling with rising payments, talk to your lender now. Don't wait until you're in default. The earlier you act, the more options you're going to have. And if you're a buyer hunting for value, go in with your eyes open. Do your due diligence, work with someone who understands this process, and don't get blinded by a low price tag. Because in this market, the best deal isn't always the cheapest. It's the one that doesn't cost you twice as much 6 months later. I'm Kyle Mark. If you want access to current court-ordered listings or you want to understand how to safely navigate this side of the market, all my contact information is in the link in the description below, or scan that QR code on the banner, and I look forward to help you with any of your Vancouver real estate needs.